Netflix, you know who the company is, you know what they do, you know that they changed the game and have started the bankrupting of a bunch of legacy media operations that got used to TV and refused to innovate and disrupt the market. And so Netflix came along, they built a new business itself, they created a new industry which we now know as streaming, and at their peak they were valued near $1 trillion. They absolutely boomed over the pandemic as people were locked away at home. What else did they have to do but to turn on the TV and watch some streamed TV shows? It was a very popular investment company as well. It was peddled all over Reddit and all over YouTube by a bunch of really popular investors here. And as a result, they saw a monumental peak in 2021. But since then, since 2022 has started, Netflix has been on the down and it's posted an absolutely awful year. At Netflix's peak in the latter half of November, they posted a share price of almost $700. But since then, it's been as low as $160. And right now, as I speak, it's been sitting at around $200, representing a fall from grace of 75% negative returns from its all-time high, or 65% from year to date. Today, of course, I'm sure you won't be surprised to hear that we're going to be looking at Netflix, the company. They just put out another earnings report and we're going to establish exactly what happened, what went wrong and what went right, and why the company as a whole is actually facing a few problems that put it a little bit in trouble. Now, so we start off with the earnings report itself, and it was actually good. You can obviously see it behind me here, but to be honest, it's 15 pages long and there's a whole load of information there. So we're just instead going to give you the headline figures. Now, subscriber numbers are obviously important for a company like Netflix. That's how they make their revenue, through monthly subscriptions. And so it's pretty much the most paid attention to figure that comes out every quarter. And their number was down by 970,000. They lost 970,000 subscribers over the last 3 months, which sounds bad, and it is bad. Let's be honest, this is supposed to be a growth company. But actually, the market had priced in and Netflix had expected a 2 million subscriber loss, so it really could have been far worse. Right now, the company has about 220 million monthly paying customers. They expect to add another 1 million over the next quarter, which sounds good, and that is better than we saw over the last quarter. But actually, investors were expecting a 2 million subscriber gain, so that isn't brilliant. Now, earnings per share for Netflix was down at $3.20, which was actually above the expected level of $2.94, so that's some good news. But then revenue for the company was sitting just below $8 billion, and it was expected to be just above $8 billion, representing about 9% year-over-year growth, so that's a miss. So really, the headline figures aren't actually all good as the markets might suggest they are. The share price of Netflix is up by about 18% over the last week or so since this data came out. But it isn't all good, and actually those headline figures don't tell the whole story either. Netflix also missed out on $340 million of revenue due to the strong dollar. Now, the idea here is pretty simple. About 60% of Netflix's revenue comes from outside of the United States. Now, me as a British person, I pay for Netflix every month, but I pay for it in pounds. And as the value of the pound has been decreasing over recent months, well, the money that Netflix is getting in return for my subscription has been decreasing as well. And that's left a $340 million hole in their bank. Now, on the whole, this earnings report wasn't great, but it wasn't as bad as expected either. And investors seem to be happy, which is why the share price is up by about 18% since this came out. Now, unfortunately, this earnings report that wasn't as bad as it could have been doesn't really change the fundamental problems that Netflix are actually facing. And that's what we're going to go on to discuss now, because actually it's really important to take a look at the company and the industry and the market that Netflix is operating in to see if they can actually turn things around and improve things in the future. Now, I try not to get too political on this channel because it's a finance channel, but it's going to be very hard for this next little segment here because we're talking about wokeness. Now, putting my personal politics aside, Netflix clearly picked a side in the culture war that we've seen in the US and the West over recent years. They put out a bunch of shows like He's Expecting, like Cuties, and that really big film Don't Look Up. Basically, they've put out a lot of left-wing content and they've pandered to that specific customer which enjoys that content at the expense of the opposite of the customer, the people that content tends to make fun of. Now, it was assumed at the time that this was probably a smart business decision, and it's difficult to fault Netflix for this because younger people on average are more likely to sign up to a service like Netflix, and they're also more likely to be left-wing. Netflix also isn't the only company to be operating in this way. It's getting really common for large corporations to put out left-wing ideals to show support for that sort of politics in an attempt to pander to that population and to get a hold of their money. It is though now starting to seem like maybe it wasn't a very good idea, and maybe the people who put these policies into place were mistakenly taking the vocal minority of the left for the majority and pandering to the wrong subset of the population. Now, the reason I personally think this is because Netflix don't actually gain much support from putting out a show like Don't Look Up. Yes, certain people will literally get a subscription purely to support Netflix for putting out a left-leaning film, but the vast majority of people who supported that film and enjoyed it really aren't so overcome by their emotions and their support of that film that they're going to go out of their way to spend extra money at something like Netflix. On the other hand, though, it does annoy an awful lot of people on the right. And so anecdotally, this is just anecdotal, I don't have data to back this up, but I've seen so many countless people talking about cancelling their Netflix subscriptions because they don't like these kind of shows or these films that Netflix promote and put out, whereas I haven't seen anything on the other side of people actively trying to support the company because they do like their political bias. It's also very easy for a lot of people to forget, but the right wing tends to make up about 50% of the population. That's just the nature of politics and humans in general. And so it can be a very difficult business decision to make work to pander exclusively to one side of the political spectrum, isolating and putting aside the rest of the population in doing so. Now again, this is not unique to Netflix. The vocal minority seems to have almost tricked businesses into supporting some pretty fringe ideologies, but some of that damage is done, although it doesn't seem like Netflix are really happy with their decision, because over recent months they've started to reverse this decision, doing pretty much the opposite. The best example of this was that Dave Chappelle special that came out, which I watched and it was funny, but there were jokes in it that were supposedly transphobic, and there was an awful lot of backlash and outrage at Netflix for putting this show up and for pushing it out. There were people claiming that it was proposing violence towards trans people. And if this had been 2020 or 2021, I think it would have been very likely that Netflix would have just taken the show down, cancelled it and given in to the mob. But this time they did the actual opposite. They actually spoke out against their own employees and said, if you don't like it, you can go work somewhere else. And they said they're going to keep that content on the site. Now, hopefully you got through that, even if you do disagree with me politically, and you can understand my point of view that I don't think it's a smart business decision to pander to a specific subset of the population at the expense of everyone else. And that brings us on to the next problem that Netflix is facing, but another thing that they are actually improving on, and it's surprisingly enough, a lack of innovation. Now, you might be surprised to hear that I think Netflix is lacking innovation because it is the disruptor. It was the Apple of TV. It created the iPhone of streaming, and it's changed the industry, and it's dominated this brand new industry that it created itself. It has loads of other companies like Amazon or Disney or Hulu copying their business model, and Netflix had a massive first mover advantage, so they are without a doubt the biggest player in the streaming space, at least if we're considering the traditional idea of streaming and not including YouTube in that space. Now, the truth is here, though, that Netflix actually did get complacent and they stopped innovating and they stopped trying to change the industry. And now that is starting to show. Their growth has been stagnating for almost a year now, and they're only just starting to talk about their new features to try and change that around. Now, what's something that Netflix was behind the curve on then? Well, it's the idea of an advertising tier for streaming, which is already sort of in place in other platforms like Amazon. There are certain shows which are available to watch for free, but with adverts, which is a brilliant way to bring more customers and more subscribers to the site, and also to increase revenue, because advertising is absolutely massive and it's pretty much the biggest industry for every major tech company right now. Now, Netflix have now come out and announced that they will be implementing this new tier, which will be a cheaper price but also include adverts, and they're going to be partnering up with Microsoft to do this. Now, Microsoft wouldn't have been my first choice for the best company to work with. That would have been Google, and if not them, then Facebook. But Microsoft is still an absolute titan in this space. I think they have over $10 billion per quarter in revenue from advertising alone, and so I'm sure they'll be able to execute well with this. If you take a look at the amount of advertising revenue that YouTube generate and then compare the watch time that YouTube tends to get with the average person compared to Netflix, then you can instantly see just how monumentally influential this could be for Netflix. They are, though, a little bit late to the party. As I said, this is already sort of a feature on Amazon Prime, and so Netflix are not the innovator here, they're chasing the innovators. The next big problem that I see with Netflix is this idea of lump sum uploads or binge watching, which has been a Netflix staple, and that's one of the reasons they were so popular in the first place, but it is simply just a little bit of a bad business model. The problem with it is that people can get their Netflix keep their subscription for just 1 or 2 months, and watch everything that they want before cancelling their Netflix, which of course Netflix don't want. They want people to stay subscribers forever and ever, paying that monthly fee into the future. Now, once again, actually, Amazon is an example of a company that's trying to disrupt this space and work out the best way to run the business rather than getting complacent. And they're doing this with just simply weekly uploads of videos of TV shows that are really popular so that people have to stay a member of that platform for longer. A brilliant way to compare this is look at the popularity of two different shows, Stranger Things from Netflix and The Boys from Amazon Prime. Now, if you take a look at any kind of social media over the last month, the amount of free advertising and cultural impact that The Boys has had on sites like TikTok is absolutely massive, and it's remained massive for about 2 months because they release one episode every week, so there's a constant slow supply of new content and more information and more hype for this show, whereas Netflix with their lump sum uploads of Stranger Things hasn't been quite as effective at capturing people's attention for sustained periods of time. Now again, Netflix is actually realizing their mistake here, and they did make a slight change of Stranger Things, at least splitting it up into 2 separate releases, I think about a month apart. But from my experience, and again, this is just anecdotally, the cultural impact of The Boys has been far, far greater than Stranger Things, despite the fact that actually I think Stranger Things is a bigger and more successful show in the first place. Now, of course, Netflix is also facing a bunch of new competitors, new entrants to this scene, companies with the very deep pockets as well, like Disney, Amazon, as we've spoken about, Hulu, HBO, Roku, and there's many, many more as well. This has all come because of Netflix's success, and I don't think you can, in any good kind of faith, claim that they aren't successful, because they went from not even a major player in media at all to dominating culture in about the space of just a decade. But there are now too many competitors. People's monthly outgoings are increasing to the point where this is just as expensive as cable TV now, and so I do think that market consolidation will happen. For this though, I don't think it's actually a major problem for Netflix. They will be fine. They are so entrenched in cultural norms around the West right now that there's no chance of them losing this fight. That's when we get onto the generic problem that Netflix is facing, but all of their other competitors are facing it as well, which is a little bit of a silver lining. It is the idea that actually streaming is an unproven business model. We don't know if over decades this will prove to be profitable, or if it will be too expensive to create this kind of content just to charge $10 to $15 a month for access to it. On top of that, Netflix are given the really hard task of proving this model while in a really tough economic environment. We have quantitative tightening finally kicking off. We have Federal Reserve interest rates, and we have valuation resets across almost every industry in the world, with equity prices falling everywhere. Now, don't get me wrong, I don't at all expect Netflix to go bankrupt because of this. They will have no trouble raising more capital if they chose to release shares at any one point, and so they're not going to die from this kind of impact, but they will definitely suffer, and it will impact their growth into the future. Now, this article from Simply Wall Street here actually gives a pretty good synopsis of the whole situation. Few large companies experienced a fall from grace with a higher velocity than Netflix, as it created over 70% year to date. Now, the stock is showing signs of bottoming, supported by the fact that its latest results were not as bad as expected. Now, I personally wouldn't go quite so far as to say that Netflix has bottomed. I think we're only getting into a recession, and we haven't really seen people start to cut back on their monthly outgoings, of which I do expect people to cancel their Netflix subscriptions when they struggle to start paying their rent and when their gas prices just remain too high for too long. But I do think it's safe to say that actually Netflix is through the worst of it. I don't think they're going to see many more 30% declines on earnings reports, and they may well only be a few months away from actually bottoming. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.